Taking a look at stocks right now, the Dow, NASDAQ, as well as the S&P 500. I think we know what the colors mean. You can see the green is good and red is not so good. But tonight we wanted to take some time to further explain what these stock numbers actually mean. I am joined now by Money Mike Giordano, financial advisor with Williams Wealth Management. You are here to make it all make sense for us. So we see the Dow, the S&P, and the NASDAQ all the time. That can look like a foreign language to a lot of us. Can you just break down what do the numbers mean?
Yeah, I mean, it's like going to the grocery store. Those are three different baskets, and they have different. They have stocks in each of those baskets. The Dow Jones Industrial Average is the oldest. It's from back in the 1880s. I was a few years before I was born. So it holds about 30 stocks. The S&P 500, as it's named, it has 500 different companies inside its basket. And the NASDAQ, which is really the NASDAQ 100, takes a look at the 100 top companies within the NASDAQ stock exchange.
Okay, that makes sense. I love the way you just broke that down for me. So I was visualizing that as you were talking about it. Do the different benchmarks hold different stocks?
No, I mean, continuing that whole basket thing, if you go to the grocery store, you'll see a lot of the same items in three different people's shopping carts, right? It's the same thing here. You have a lot of the same stocks that are in each of the different baskets. Now, of course, the Dow only has 30 and the S&P 500 has 500 companies, so there's going to be a lot more companies in the S&P 500. But it's really a case of how they weight each one of these companies. The Dow Jones Industrial Average likes to weight things based on price. So Chilean sea bass is more expensive than bananas. So in the Dow Jones, the Chilean sea bass would have a much greater weighting. But if you take a look at how many bananas are sold, it's a lot more than any of the sea bass. So in the NASDAQ or the S&P, which take a look at how big the market size is, bananas would have a bigger weighting. And so that's really the big fundamental characteristic difference.
You're making me a little hungry here as we're talking about this.
Makes everybody hungry.
So you said you can see the same items in different carts. Is there a particular item that we should pay a little bit more attention to?
Well, when you're trying to figure out which benchmark makes the most sense for you, you got to think about what kind of an investor are you. If you're an investor who's buying mature value companies, you don't like a lot of price fluctuations, you like a lot of the income from dividends, then the Dow Jones Industrial Average is going to be probably the benchmark to look at. If you're somebody that likes to just invest in tech companies, those high, fast growth companies, then you want to look more at the NASDAQ. Most investors are in the middle there. They're looking at a cross between mature companies and growth companies, and that's where the broad S&P 500 comes into play. However, most people aren't buying just into the stock market. They also hold a lot of bonds. And so you got to take a look at another indice, which is the Barclays Aggregate Bond Index, and then kind of get a better gauge. So you want to compare apples to apples. So if you have 50% stocks, 50% bonds, you want to take a look at both the bond index and maybe the S&P 500 and kind of figure out somewhere in the middle.
And everyone is different, but is there a particular benchmark that investors should really hone in on?
Yeah, I would say, I mean, everybody gets so dialed in on those numbers because we see them all the time. And so it makes a lot of sense for why people look at the actual benchmarks. But the real benchmark that matters to you is your own personal benchmark. What are your goals? You want to save $100,000 for a down payment next year. You need $200,000 for a college education in 5 years, and you need $2 million for retirement in 15 years. What's the progress look like on those goals? Because you only have this one life. There are no redos. So you need to make sure that you're on the progress and on the path to your own goals, because that's what investing success really looks like. It doesn't look like any of these broad benchmarks. It's really about, are you on the path to achieving your own financial goals?
All right, Mike G, always giving us the gems. Thank you. We appreciate it. As always, you only get this advice here on WYFF News 4.